Greetings, members one and all of the Salivation Nation. How increased demand for gold can shift buying strategy. Let's explore. Through the coronavirus pandemic, we are seeing at an accelerated rate and what we already knew was coming. The Black Swan event of 2020 has certainly caused an accelerated rate of economic uncertainty, and the response to governments and central banks around the world are that of increased liquidity into the markets to try to stimulate growth, or at least to keep our heads above water. But that dilutes the currency supply, and that causes great problems in terms of the faith that we have in our currencies. And as you know, with government injection into the economy comes stimulus as well. And here in the United States, there's a battle right now as to how much stimulus should be invoked. And that certainly does increase the velocity of money at a given rate in time, and that also increases deficit spending, which leads to even greater debt. And that means we need something of stability, something of value. That's why people turn to gold, and that's why we've seen an increased demand for the yellow metal over the past year and even in the past month. And I think that is something that's going to continue. We've seen trend lines move in this direction for gold as the ultimate safe haven in physical form. We see sales numbers from the United States Mint on the Gold Eagle and fractionals becoming somewhat scarce. You know, gold is a metal that has been coveted and been treasured for millennia, thousands of years, and that's not going away. We have ebbs and flows of this demand, but I believe that we may be on the precipice of something coming in the next couple of years here at the current rate we're going if we don't change course in some way, in some manner, in some form. Regardless, the demand for gold is strong, and that increased demand can change our strategies in terms of making purchases for the metal, in terms of the physical metal, because it's hard to come by for some things that we want at a decent price in terms of how gold is offered in the physical. It could be in the form of poured or cast bars, struck bars, or coins or rounds. Gold it comes in a variety of different aspects and angles, from the divisible 1 gram type or little tiny fractional gold that comes to us from the Mexican Mint at a somewhat low premium, but it comes in many different ways and different forms, and we can enjoy it and we can buy it, but the premiums depend on the style and the demand of a particular product that you would buy. You know, the larger the size, typically the smaller the premium, but with the spot price going up, it makes it difficult to be able to get a piece of gold for a decent price, and then you have to add on, what the premiums are. But gold is continuing to rise, and it had reached record levels last year around the summertime, well over $2,000 an ounce. Many are thinking that it's going to get to that level again. And so what does that mean? Well, we have to buy smart, buy with the lowest premium possible, and find pieces that you can accumulate and get the best bargain for your buck, or whatever currency that you use. This is an example. Probably the best way and the most affordable option is the 1 ounce gold coin of a recognized nation, and for liquidity, such as the Britannia. This is a beautiful piece here, one of my favorites of 2020. I love the security features of it. I think it's very well done, well designed. But there are obviously others. The American Gold Eagle is the most recognized and the most sold, for sure, and undoubtedly the most liquid. But you will pay a higher premium for those. And if with the prices rising, you have to come to wonder if you can afford to get an ounce of gold at a time. Then you have to shift and maybe try a brand that's maybe not quite as popular as the Eagle. The Royal Canadian Mint may be the next best step for getting gold at a fairly decent premium and a smaller size. The half-ounce gold maple leaf may be one example. But with demand rising, premiums rise as well. And those premiums are on the 1 ounce, the half ounce, which is even a larger premium. And as you go down at different sizes, well, you're going to pay a higher premium. The quarter ounce used to be the sweet spot to where you can find these at a fairly decent premium, or affordable premium above spot price for a smaller size gold. Nonetheless, as prices rise, premiums rise, even the 10th ounce may be where we may have to settle if they get too high if you want to continue to buy gold in the physical form. And that is something that we have to keep in mind, is that these rising premiums along with gold and what is considered a fair price, that shifts from time to time. Gold is a type of metal that typically gives you the best value for the amount of money that you spend, and typically is a better buy than silver. Silver's premiums have been very, very high during the height of the coronavirus pandemic around March of last year. But gold certainly suffered as well. Gold's premiums very, very high, and they certainly made it more difficult, especially when you're spending so much money already just for the intrinsic value of the spot price for gold, and then you have to pay a very high premium on top of that. And so what other options are there if there's a high premium on the physical? Well, most people understand that there are ways to buy gold other than in physical form. You can get it in digital form. You can use different options that some bullion dealers have to be able to buy fractions of gold in a digital account that's backed by, some sort of ledger, blockchain, and the like, and you can redeem them at those bullion dealers. You can buy gold-backed cryptos, but some of those are a little risky and not quite as tested. And then you have ETFs, exchange-traded funds. That's another way to be able to buy gold. And then you have gold futures that are out there. And a lot of those, the premiums are going to be just essentially trading fees that you would incur, which are going to be fairly set and level, and you don't have to worry about the high premiums or holding the physical. It's just another way, but that may be one way to shift your buying strategy with these high premiums on the physical. And then the other way is to consider investing in mining stocks of some sort, gold mining stocks, which gives you into the outside of the realm of the actual physical, but you're investing in companies that are in mining in general, but also at another level, finding companies who are looking to discover new gold mines. And that brings us to the sponsored portion of this video. With prices increasing, well, so does demand. And that demand makes it feasible for companies to explore and try to find new sources of gold, new gold mines. And Canada's newest high-grade gold discovery is right on the cusp, according to what we have been hearing about by some of these companies that have been drilling in areas in Canada. Newfoundland is one area specifically that is quite exciting. Newfound Gold Corporation is a company that is looking at a specific area here in Canada called the Queensway Project. It is fascinating to see what's the discoveries that have already been made from core samples in that area. There is an unexplored district for the Queensway Project that is 1,500 square kilometers within a highly prospective central Newfoundland gold belt. That's right, and it's very interesting to note that with some of these core samples and already areas that have been drilled for sampling that they've noticed that there has been a similar geologic setting to the Foresterville mine in the Victoria goldfields of Australia. So it is something of excitement, seeing the geology of some of these zones and how they have been active there. And the company itself has quite an impressive balance sheet here that shows some of the numbers and some of the options. The working capital of $67 million with a market cap of $639 million and some big investors. You've heard me talk about Eric Sprott, and now we have also Rob McGowan as well. And this is something that their leadership and team with this shareholder base with Eric Sprott and Rob McGowan are akin essentially to Warren Buffett or Ray Dalio, or in the tech sector, Jeff Bezos and Elon Musk. And so I think that is something that is profound and consideration of where to invest money in something of this nature. Now, as is always the case when considering making investments in something like this where there is a prospect for potential finds there, that it is risky. There's no actual promise that as they continue to drill, that they will find a substantial amount there. But I think there is some excitement and understanding to where some of the people that have put their money in this, they feel strongly that it will pay off with some good results. But as is always the case, these are risky ventures, and to take that into account, always good to do your own due diligence for situations like this and for companies, and that is to reach out, and I will post a link to the website below, and you can contact them to ask any questions that you have if you're considering investing in Newfound Gold Corporation. But I've watched a couple of their videos, and I've seen some of the very exciting discoveries that they have made. They have a lot of high-tech equipment that they use to be able to sample and to be able to do things right in the field. Over the last couple of years, they've grown substantially, and they've started their acquisition of the property around 2016, and have been working hard there ever since. So there's some potential in this site, and there's other areas as well too for Newfound Gold Corporation. So something to consider there. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.